All right, supply and demand tips and tricks part two. We're going to go over multiple time frames. On the left, I have the daily, and on the right, I have the hourly. Um, in terms of multiple time frames, you want your time frame to be your higher time frame to be somewhat relative to your shorter one. So like a 5 minute hourly, 1 minute, 15 minute, 60 minute daily. You want the higher time frame to give you enough information to actually trade off of your trading time frame. As far as specifics on that, it's really whatever you're comfortable with. I would definitely say test out different things. I love the 5 minute and 60 minute for day trading. We're also going to look at eliminating zones. You can see on the left here, we have this uptrend, right? There's a lot of zones. So this is what we're going to focus on. This is our uptrend, and now we're pulling back. And, you know, for whatever on the higher time frames, we're in an uptrend. We're looking for a quality demand zone to buy. So that's how we're going to break this down. So right now, let's pretend none of this happened. We're just right here where we had our first demand zone break. Okay, up this whole up move, this was the first demand to break. That's our first signal that maybe something's changing, but this has been a strong move. So I want to buy somewhere. So let's figure it out. So obviously, this demand up here broke. Get rid of it. What about these demand areas? This is all demand. We went higher, retested it, pushed higher, retested it, pushed higher, retested it. But remember, the more you test a supplier demand level, the more likely it is to fail, because this spent a lot of time here. Price doesn't care. The big money in the market doesn't care where price has already been. They already agreed upon it. They already traded on it. All this in here does not matter. This is the originating demand of this move. We ate pretty much through it. It got retested. This demand got retested twice. So none of this matters. Okay, this is the picture now. Makes a lot more sense. Well, let's see. What other zones can we eliminate? Well, we for sure, um, this zone here created all this up move. This might be something to look at, but look at all this time we spent here. This is the originating demand of this move. We pretty much ate through it. I'm really not too concerned about these zones either. As far as catching the next leg up, those don't seem very strong. Now at this point, this is the picture. So we're looking for somewhere down here. Let's see here. This zone broke, and then we created this demand on the sub candle. This demand is not tested, so there's probably orders here. So I would expect a bounce here. Same thing down here. This originated this large upswing, untested also, quality. And this is the originating demand. It has been tested once, but it's still the originating demand, which is a significant level. Okay, significant levels down here and right here. Now another thing, when thinking about the market is like a TV. The market is a product, right? Right now, you say this is the price of the product. Okay, so the price has just been getting more expensive. Let's say right about in the middle is what it's usually priced at. So where is price on sale? You know, institutions want to buy price on sale. But where's price on sale? This is after we get past 50%. That's why I reference half back in some of my videos. We're officially on sale. So according to this swing in the market, you consider the TV to be maybe 10% off here, 20% off here, 50% off here, right? And the TV is just normal priced right in the middle. So this demand right here being in the lower half, that looks beautiful to me. So from this picture, this is all I would be looking at. Simplify it as much as possible. We start to move down and we create supply along the way. But, we could see on these previous areas of demand, we found a little chop, but what little resistance they actually offered. Now we're getting into our area of interest. So this is our higher time frame picture. We're coming into our area of interest. Price is on sale. We're in a larger time frame uptrend. We're stacking all the probabilities in our favor. Right now, the probabilities are demand will step into the market. Now, I don't know what it's going to do, but we're in a higher time frame uptrend. Most likely we make new highs. So let's get down into this demand. And that is this picture on the right. So right here, we come down into our demand. Beautiful. I'm not just going to throw a buy willy-nilly. I want to see what happens. Creates demand on this candle. I would put a buy at the top of this demand. And yeah, I mean, that is stacking all the probabilities in your favor right now. Now let's see what we do. And we move up. Beautiful. And it pulls back to our demand imbalance. That actually would not have filled me. That happens a lot. But it shows you the picture, right? Let's move forward a little bit. So we're in this, these lighter green zones are this time frame's demand, and these orange zones are this time frame supply. The other ones are the higher time frame. So down here we create strong demand because we break supply. Excellent. That would be our buy. Now let's see what price does after this. So once we come up here and we break this supply level on this higher time frame, we're expecting to go higher. Okay, it all comes together. Now let's look on the right. Let's break down our demand zones, right? This one up here, well, if we look at this swing here in terms of is this TV cheap or expensive? Well, not until here-ish or below does it get on sale. So I'm not looking to buy this. What about these two zones? A lot of time was spent in this area. We came back, chopped around, we came, retested it. Not too interested in these. What about this one? Nice reaction. Nice imbalance shown from the market here. Breaking previous supply. Not tested again. Quality. This one, originating this swing, tested once. Keep an eye out. This is the originating demand. So, down here, price is cheap. These are the zones we're looking at. Our first sign of something changing is when we start breaking the demand up here. The price comes down. Where do we go? Well, we go on sale to our first quality imbalance. And then we're off to the races, right? It's the same picture over and over. Price wants to find a cheap. Institutions want to find a cheap price. And we can see where the primary imbalances are. If we look at the higher time frame, bring it down to the lower time frame, wait for demand to form on your lower time frame from that higher time frame demand, you are putting all the probabilities in your favor. I marked this gold area up here. I want to go over real quick. This is the higher time frame supply, and I would have drawn it to the open and close. But you always have to be aware of the full imbalance area. The full imbalance area is to this wick, and that's where we come. So I wouldn't have said we reached supply, but we're definitely in the area, right? So that's when I talk about specifics. Remember, supply and demand can be very specific, but when you go on higher time frames, it becomes a larger and larger area. So one more example, on this upswing, we go ahead and take out all this supply. This is untested. So we came and we tested this demand. Now we formed this demand. Fresh, looks great. That's where we come back, right? I think that's about all I want to cover. The idea, people have asked, like, what is your strategy? Well, it's supply and demand. We're looking for the imbalances and we're taking advantage of them. We want all the probabilities to be in our favor. We want it to be a quality zone. We want all the orders to still be there. We don't want it to be tested. We want to see price react to it. And then we want to buy when we come back into that imbalance. This happens over and over and over. You just have to look at the quality areas when price is on sale, because that's where the money in the market is looking. Hope that helped. Let me know if you have any questions.